Hello and welcome back to the channel. If you're thinking about buying a home, refinancing, or just wondering why mortgage rates are moving, this video is for you. Yesterday and today, we got some important economic news that directly affects your mortgage rate and the housing market. Let's break it down in plain English. First, the big positive. The June Consumer Price Index, CPI, inflation report was much cooler than expected. Headline inflation dropped a solid 0.4% for the month, and year-over-year inflation fell from 4.2% down to 3.5%. That's better than what economists were forecasting. Even more important for mortgage rates is the core inflation number, which strips out volatile food and energy prices. Core came in almost flat at minus 0.02% for the month and slowed to 2.6% year over year. Shelter costs, which make up nearly half of core inflation, are finally starting to cool down too, rising just 0.1% last month. Normally, cooler inflation like this is very good news for mortgage rates. It increases the odds that the Federal Reserve can cut rates later this year, which helps push mortgage rates lower. Mortgage bonds did bounce higher this morning after the report, but here's where it gets complicated. Oil prices have risen sharply above $80 a barrel after news that the U.S. is reinstating a blockade in the Strait of Hormuz. That's the critical waterway for a lot of global oil shipments. Higher oil and gasoline prices could push inflation back up in the coming months, which is exactly what the Fed doesn't want. On top of that, Fed Governor Christopher Waller struck a pretty hawkish tone yesterday. He said inflation is still too hot, the labor market is close to maximum sustainable levels, and the Fed needs to be ready to hike rates if inflation heats up again. He doesn't want a repeat of 2021 to 2022 when the Fed waited too long. Because of this, mortgage bonds actually sold off yesterday, and the 10-year Treasury yield moved higher before pulling back a bit today. So what does all this mean for you? Right now, mortgage rates are getting some support from the tame inflation data, but they remain sensitive to oil prices and any further hawkish comments from the Fed. We're in a cautious holding pattern. Mortgage bonds are bouncing this morning, but we have to watch whether the recent oil spike starts to influence the market as the day goes on. For home buyers, this cooler inflation gives some hope that rates could trend lower if the Fed stays on track. But don't count on a big drop anytime soon. The situation is still fluid. If you're in the market, it's smart to work with a lender who can watch these moves in real time and lock in a rate when the timing feels right for your situation. That's the latest on how today's economic news is affecting mortgage rates and the housing market. Drop your questions in the comments. I read them all. Hit like if this was helpful, and I'll see you in the next one. Thanks for watching.